Good morning. It's March 17th, Critical Point podcast on the stock market, and we're using the S&P 500 mini futures as a proxy for the U.S. market, as well as a hint for global markets. Anyway, let's go right to the intraday, intra-week portion of the model. This is an hourly chart, and last Friday we said the market may have placed on Thursday a level 3 bottom and could rally into this week and then would probably be down the following week. And we'll show you that in a moment on the daily chart. At any rate, it now looks as though with the low as of yesterday, lower than the low on Thursday, Friday, that the level 3 probably did not bottom then, and it's the next opportunity. And we did say last week that the bear side could win into early this week. Now, as we break that down, we want to look at level 4s, and we can see we had a level 4 rally on Friday. Now, it was a different structure than we anticipated. In theory, when it made this new high late in the afternoon off of, I believe, some Trump announcement or discussion, it really should have continued going. So that shows you that the model is detecting a sloppy market here, and we think what's going on is there are a few more people out there looking at the possibility there's some good buys, some bargains here, and it's interfering with the bearish state, and yet overall everything is still bearish. Okay, so we're getting a little bit of change of environment here within a longer term bear market trend. So at any rate, we want to be a little questionable here. The model performed very well through most of this decline on an intraday, interweek basis. And now we just have to be cautious. And maybe we're going to see some sloppiness here as it kind of develops a trading range and perhaps even base building towards a more important bottom. At any rate, we think what's going on is the market's coming down into an L4 bottom that is due anytime the first half today. Our best guess is it ought to delay a little bit. That is going to take more like 9 o'clock, let's say, on Central Time for the earliest for a low, but we just don't know because this market is crazy. Okay, so bottom line is we think we'll see a bottom early today. The market bounces into a top late today to early tomorrow, and then it'll probably be ready for another level 4 downswing. We don't have much for support and resistance. Just look at your daily highs and some of these intraday highs. You can watch the SAR to see if that's going to trigger some additional buying. And likewise, you can look at lows and just use Fibonacci retracements and projections to give an idea of what the market might be looking at. Even though at this volatility, we think a lot of technical price projection studies are not that valuable. Okay, so zooming out, we want to look at level 3 trends. And there was actual level 3 bottom here on February 28th. The market topped out around March 4th or 5th. It's come down into the time zone and a bit of price objective for a level 3 bottom. And with Friday's surge, we thought that was the first opportunity to show it. In fact, we thought it was beginning from the Thursday bottom. And now we can see that was incorrect. The market changed its mind. It's extending the L3 downtrend. But notice how it's hovering near lows. Notice the market is having a difficult time moving daily lows at a much lower pace, a faster down pace is what I'm trying to say. And notice this indicator has turned long. It's trying to be bullish. We have a detrending indicator that's extremely low, also trying to turn up. The model suggesting we're still going to get a bounce into an L3 top, even though Monday was the first, ideally, for a top. We now think it's going to occur later this week. We have lowered the downside objective. We think it won't go much higher than, say, 25.73 to maybe 28.14, if that high even. But we have to understand we could see far more extreme. There could be a FOMO moment here that everyone just stumbles all over themselves to buy. Now, again, this is just an L3. We want to zoom to larger trends here because what should occur is the market should pull back down into a level 3 bottom, say, next week to early following. So now let's zoom out on the weekly chart to show you this bigger fluctuation. Okay, so the market last year was fluctuating fairly well within level 1, level 2 trends. These are intra-year trends, and inside them were the level 3 that we just showed you on the daily chart. So what we think occurring is the market's trying to bounce into a level 3 top sometime this week to say first half next week. It should decline next week into a bottom, and that would be the first chance for a level 3 bottom, although looking at the action this week, we favor a week later. So what should occur sometime over the next 1 to 4 weeks, and it's looking more like 2 to 4 weeks now, we should put in a level 2 or level 1 bottom alongside yet another level 3 and all the L4s. So this is like a clock with many hands, and the clock is striking midnight for these level 2 or level 1s. Now, if it is a level 2, the market shouldn't rally very far and may only rally for 2 to 4 weeks, but it can rally into late April to even mid to late May, and then it would decline and likely decline back to the low that we're establishing now in the next few weeks, and ideally still lower. So that would mean the bear market is extending. Now, if by chance it's a level 1 bottom, the market can rally a little higher, stay up a little longer into a level 2 top. It would pull back into just a level 2 bottom, which would probably mean just a retracement, and then go still higher by summer into the next level 1. So the market is looking at two scenarios out to June, July, when one scenario is saying it's going to be bullish and another scenario is going to say it's bearish, and it just depends on how the fundamental data is flowing, but more importantly, how people think of that data and how do they actually want to trade and manage their money relative to that data. So the bottom line is we think there's still downside potential, and maybe even to the 2100s for the S&P 500, but at the same time it's getting oversold enough. The 5-week stochastic starting to roll towards a buy signal, and we know we're coming in this time frame for a bottom. So we have to consider maybe the market's gone low enough. If it has gone low enough, it should kind of chop around into this level 2, level 1 bottom that's not due this week, and may now not be due next week even. We'll have to see how this week develops. Again, we think 2 to 4 weeks before we get some kind of bottom and some kind of bounce. So we're thinking this might even be a long-term bottom, but there will be multiple opportunities for long-term bottoms all the way into next year. But the point is this collapse is sizable enough that it may have dialed in more negative news than what we see right now. In other words, we're going to eventually get actual statistics showing what has happened to the economy, and we do think the economy is now in recession. So again, we want to be preparing to turn bullish here, and we'll probably be bullish for long-term and intermediate and minor intermediate, with the idea if we have to, we'll step out, we'll get stopped out if it does want to go lower into June, or we buy more for the long-term buy and hold type people. This is the cash S&P, and we have a 9-year business cycle along with super cycles back in 2009. Breaks down into 3-year business cycles. And this coming 3-year business cycle bottom will trigger a 9-year business cycle, and the economy should then grow for 7 to 12 years. Once it has bottomed, it can bottom later in the stock market. But that suggests with the correlation between the stock market and economy that the stock market should have a 7 to 12-year bull market. We can see it's coming down to former long-term resistance and a long-term bed of support back here in 2015, 2016. There was a secondary recession, and so that line is coming in near 2200, and we're trying to take out the December 2018 low. Now, one forecast says this 3-year cycle low should be moved to here, and this will allow a long-term bottom to occur now, but it would be the earliest. It could have multiple opportunities to bottom all the way into early next year. However, if we leave the 3-year cycle where it's currently showing, then the market should not bottom now and should bottom later this year on into late next year. Ideally, this wouldn't even bottom to, say, the fourth quarter of this year. And we're uncertain as to which is the better forecast, but we feel like it may be best to err on the side that a long-term bottom can occur with this coming level 1 bottom in the next few weeks. Now, of course, it has to be a level 1. You can't have a long-term bottom at level 2, so that's the debate we're going to have not only in the next few weeks, but probably for several months. Hope this has been of some help, And again, we do see some upside here into tomorrow, perhaps. We do see some choppiness, but we don't think we're into a significant bottom, a chance to be buyers here for another 2, 3, 4 weeks. As always, manage your risk relative to the analysis of others and your own.